What's up, guys? I'm Jamie Tajera with Property Bear here in Jacksonville, Florida, and we are going over the weekly numbers for real estate. Today is August 6th, 2022. Thanks for checking it out. All right, so the first thing we are looking at is the sales price. If you guys have seen these before, we filter it by Clay, Duval, and St. Johns County. If you want, more specific information for a specific market, we can do that too. Um, but for us, these are the three that we mostly work in. So that's why we go over them. So sales price over the past um, 3 weeks, it has gone up. You can tell that, like, since rates started going up in March, um, you know we've kind of barcoded from a price standpoint, up, down, up, down, up, down, on the weekly, and that's kind of what we expect now. um, we're right here at 375. Last week we are at 369. um, So it's up 1.6%. I have a feeling we're going to kind of live around here, this 375, 370 number for a while. I could be wrong. I know people are worried about recession and all of that stuff going on. Just keep in mind, recession doesn't mean housing crisis. I think there's only been a housing crisis in two of the last 12 recessions. Um, but just keep that in mind. So our next weekly metric is closed sales. And so week over week, we're up 8.2%. It's really kind of negligible. I mean, we're looking at what, 500 home sales a week, 400 here. And then even in 2021, when we weren't talking about recession, we're still at the same number of homes, that are actually selling and closing. So um, there's that. Here's something to take in account if you are looking to sell. If you're expecting those 2021 numbers where the house sells in like 3 days, keep in mind this is the median. We're at 34 days. So it takes longer to sell something, but we're going to go into another number that I'll show you. So it's taking longer to sell mostly because your buyer pool is getting squeezed, from an interest rate standpoint. So days on market, active inventory. So you can see that this took a dip. If you watched our video for August, which we basically do it once a month, and we recapped um, July basically. It kind of took a dip, right? And so, as far as like active inventory and people listing, here's the thing, and this is kind of what we're telling people. I mean, we're, I guess, starting to tell people the problem with interest rates, and this is just the reality. The problem with interest rates and someone selling, like if you own your primary home and you bought it in the last 24 months, there's no reason for you to sell. It's a bad decision for you to sell. I know that sounds crazy coming from a real estate company, but um, why are you going to sell? You're not moving up. You're not selling one property to move up. You're making a lateral move. If you're trading one for the other. So, and I think people are starting to realize that, oh, if I sell, where am I going to go? Before, the question was based on inventory. Today it's based on price. If I sell my house, I'm not really moving to a nicer house for the same amount of money. I'm just paying more for the same thing. So keep unless you're getting like a smoking deal, right? Um, but even then, I would check out that amortization schedule and make sure it makes sense. If you've got second properties or something like that you're looking to sell, it could make sense. So you see active inventory starting to take a little bit of a dip. Um, and let's go new pending sales. Yep. Because closed sales is kind of a lagging indicator. It tells you what's closed. All of those have been under contract for 30 to 45 days. New pending sales is like, hey, these are the new things that have gone under contract. Um, so let's see. So week over week, it's up almost 2%. Um, so people are still buying, but you see your days on market, people are being a lot pickier, and it's because interest rates are, people that are getting into the market um, are seeing, you know, they've they're more likely to buy because they're getting into the market. The rentals are expensive, but on the high end market, I'm actually going to split this up into days on market for the different price points, so you can see what we're looking at, and then mortgage rates. You can see we're kind of hovering around the same number, right over 6% on a 30-year. But if you do want to have a conversation with a lender, give us a call. We know some really good ones depending on what you're trying to do. DSCR for investments, first-time home buyer, whatever. The Heroes program. But let's break this up into days on market. And so this is the general price point, right? So I'm gonna mess with these filters if it lets me. And single family condominium, let's see. I mean, I would say let's break this into 0 to 350. Well, let's go 0 to 400 for all four, right? So I think this is updated. But let's say, I mean, I've got 0 to 400, and I've got 33 days on market. 33 days on market. So let's do 400 to a million, and then a million plus. I want to see if I can take out, it won't, oh, it only lets me take out new construction on the monthly, I think. Oh. All right. Yeah, so 400 to 990 just to make sure it doesn't pull up all of those. And you've got 38, and it did go down a little bit. Okay, cool. 36 days. And your million plus, what is that, 980 plus? Yeah, so you're at 40 days on market. It's still lower than still lower than September 2021, right? Um, but you can see that it does creep up, depending on the price point. So depending on what price point you're trying to sell a property at, or if you're buying one at that, you kind of know what your time frame is going to look like. Hope this was helpful, and we'll see you again next Monday.